What is up, YouTube? It's Quintanilla Trader here. Today is May 28th, and this is the trade recap for today. As you can see here, we have the 4-hour chart in front of us, and the biggest thing that I was watching here on the 4-hour was this 4-hour fair value gap that I wanted to see price react out of, and of course we did dip below that, and we still closed back above it, holding that 4-hour FVG, which then obviously shot us in the after hours now over this 616.25 level that I was looking at. Yeah, I mean, it was a crazy market today. The price action was really choppy, as you can see. Look at the 10 o'clock candle. It is this indecision candle where we have barely any movement, right? At the 6 o'clock candle, we moved up, pushed right back down, and then we had little to no movement in the AM session. So that was a little bit unfortunate, but there were some good setups. I wasn't able to capitalize on all of them. I actually took a losing trade today, and I'll explain why my trade ended up losing. If we look here, the biggest thing that stuck out to me was the structure overall. You see we have that swing low, swing high, higher low, higher high, higher low, higher high. So I wanted to see if within this price leg here, because we had yet to retrace back down into premium, or sorry, into discount, which would be from this low right here all the way up into this swing high that was created. I wanted to see price move back down into discount and then react out of that 4-hour fair value gap and then continue on higher. Now, the only problem that we had in that move down was the fact that we weren't invalidating this 1-hour fair value gap that I had right here. And the reason why I was concerned about that is because I use order flow a lot. And without order flow, you're not going to know what direction the market wants to trade in. And also, if order flow is not aligned with your entry, then you're also going to end up be taking trades that are lower probability, and then you're going to end up getting stopped out. You're probably going to question, why did I get stopped out on this trade? Everything looked perfect. Well, if you zoom out to the higher time frame, you're probably not paying attention to the order flow of the chart. And so here you can see that the 1-hour fair value gap hadn't gotten invalidated. If we zoom in, there is just a little bit more left in order for a 1-hour candle to invalidate this. So I should have been looking for longs in this area here, which would have played out. I would have gotten a 1 to 2, but unfortunately I took a short thinking that we were going to invalidate this. I was kind of preemptively looking for that to happen. And obviously we don't predict, we react. And I was trying to predict what the market was going to do. So the biggest thing that I was looking out for was this 1 hour to be held and then a continuation back on up. If we go to the 15-minute time frame, you also see here that we had pretty much the same thing as the hourly. We have this 15-minute fair value gap right there that is holding. It is also in OTE from this price leg here. We are also in discount, so a very high probability area that we're going to continue pushing on higher. If you notice, we have no displacement down lower. We react higher, but in the PM session, and then at that point we do sell off. With the news of NVIDIA coming out, right? The earnings that we had, there was obviously that anticipation to move lower before that big push on up, which ended up being just a massive liquidity sweep. So the problem that I had was, yeah, I took shorts when the order flow was not aligned with what I was looking for. So if we move on to the 1-minute chart here at New York AM2, I would have been looking for a long setup, because of the fact that we were back within this 1-hour fair value gap, and I was looking for price to move higher, targeting that area that I had up here, that 616.25. That is a previous 4-hour high where we know liquidity is residing. The only problem with that is that we did look like we were sweeping these highs and then coming down lower. So I wanted to wait a little more just to see what the structure was going to be like, if we were going to end up creating, you know, this sweep here, a higher high, lower high, etc., etc. And then I was going to take a continuation at the 1050 macro. So there was really no entry for me here. And I usually like to wait for the 10 o'clock candle to start on the 4-hour chart, because I want to see how price reacts within it. If we are going to end up displacing through the 10 o'clock open and then, you know, sweep one more time above it and then continue lower, or the opposite, right? I would want to see that we would displace back above 10 o'clock open. So coming into the 1050 macro, the only problem here was that we had yet to invalidate the 15-minute fair value gap and the 1-hour fair value gap. I should have waited for those to have taken a short setup, and unfortunately I didn't. The short setup that I took was the fact that we did reject off of the 10 o'clock open, which is a good validation. It's a good confluence that I use. We also had the daily open right here where we displaced through it. So it seemed like we wanted to put in a bearish daily candle. And so I took this 1 minute right here as an invalidation, an inversion fair value gap that I market ordered in. As soon as that happened, I put my stop above that swing high. And, you know, I did get a 1-to-1 on this trade, but it didn't hit that swing low that I wanted. And as you can see, it started to move back on up. I actually sold when we invalidated that IFEG right here, and then price retraced back down a little bit. I sold it there at pretty much half risk and called it a day because I couldn't watch the charts anymore. I was very busy for the rest of the day. So unfortunately, the only trade that I took was a loss. Now, if I had been paying attention to the order flow, the real trade that I should have taken would have been this 1 minute inversion that got created right there. As you can see, price moves on up. We had just swept the previous low right there, moved on up, created that inversion fair value gap. We did technically put in a market structure shift right there as well. And so I could have taken the market order in right there, pretty risky, or the retracement back into that inversion fair value gap and target a 1-to-2 risk to reward. Now, obviously my runners would have been all the way to the high itself, but here, you know, it would have been a long hold and eventually I would have gotten stopped out or take profit or my full take profit would have gotten hit at 2 p.m. after the FOMC minutes. So this choppiness could have been expected, obviously, with FOMC minutes coming out later today. And then we had NVIDIA earnings in the afternoon. Typically that leads to like really choppy price action. But regardless, I mean, this would have been a good trade if you had just set and forget it and avoided all of this chop. I mean, honestly, the biggest thing that would have been holding on to this trade was the 15-minute holding and that 1 hour fair value gap still holding. Until those two break or you get stopped out, there really is no reason to doubt being in this long setup. And then, of course, coming into the New York lunch, you could have probably moved your stop up a little more. Maybe have gotten a re-entry for tighter risk. So let's delete that. And the entry here would have been the 1 minute invalidation right here. If you were very bullish, if you wanted to be a little more conservative, obviously you could have taken that one right there and then target a 1-to-2, which again, you would have gotten your full take profit right there around 2 o'clock. So then at this point here in the New York PM session, with it being so close to FOMC minutes, I highly recommend do not take any trades during it. You want to see what the reaction is going to be and understand how price wants to move, and then you could take a trade. So then, yeah, leading into the last hour, at this point, with this massive dump here, push back up, you can see price at this point is kind of acting funky. It retraces. There is no bearish or bullish fair value gap that gets created to then take as an inversion and then obviously ride it all the way down to that 407 and that 360 level. So my model did not appear for that last hour. So really, there were only two good long setups today. And it sucks that the major move was the downside move, which would have been just the retracement on a higher time frame. But overall, we are now moving higher. All that to say, again, order flow is king. It's going to give you the direction, the sentiment of the market. It helps with your overall bias. So if you don't know order flow yet, I highly recommend that you look up some videos to learn about that. I do have a boot camp starting next week. If you guys want to join, tap into the description. You'll see there that there's the sign up where I teach all of these things. And so yeah, hopefully you guys ended up green. I unfortunately did not. I wasn't able to capitalize on that second long and I paid for it. I mean, it's okay. It was a small loss and I still have tomorrow and Friday to look forward to, and we'll see what tomorrow and Friday brings. Hopefully some better price action, guys. All right, peace.